back when Reagan was elected nearly 35 years ago. We were in the investment business. We were talking about how elections matter and how they don't matter. But this week, there's no question that the market reacted on an upward bias significantly, Derek.
Oh, best week in ages. The S&P 500 was up over 7%. The NASDAQ up 9%. Small cap stocks up 7%. The volatility index, something that I watch as a measure of investor complacency, declined 32% for the week, one of the largest weekly declines in over 2 years. And generally speaking, it was because the election did pose a number of surprises.
There's no question. One of the surprises that we thought was going to happen, in fact, we were listening to the pollsters, which, by the way, I mean, find another job, pollsters. But, you look at it and say that there was supposed to be a blue wave, and that appears not to have happened. The election at one point was 15% in Biden's favor here in Wisconsin. That did not happen. So we look at it and say, all right, if we're going to have divided government, and obviously that's going to come down to what happens in Georgia, that means that taxes and tax planning is going to be affected. That means things like trade are going to be affected. And where do we start?
Well, I think you start with taxes, because the idea of gridlock being good is really borne out by the historical records. The stock market has performed very well when you have a president in one party and a divided House and Senate. In fact, a 13% annualized returns, if I can remember correctly. And that's a better than average return over a long period of time. The other thing to monitor, too, is, when we were talking about the tax increases on corporations, we were talking about a 10% reduction in earnings per share estimates for the S&P 500, which would make a market that's currently trading at about 21 times forward earnings, trading at more like 23 times forward earnings, which is roughly 50% higher than the average. So it would have made an expensive market even more expensive. And that's not considering the fact that interest rates remain historically low.
You gave me a piece earlier this week that talked about, there are a lot of talk about what president and what party's better for the market, but what you showed me is that it's as important or more important than the makeup of the Congress.
That's right, and that's again something that we've talked about on the series that we've been doing for our clients over the last 3 weeks, and I think we're going to be doing another one next Tuesday. But generally speaking, you don't invest your politics. It really doesn't make a whole lot of difference who the president is. It really is more important what the composition of the House and Senate are, because that's where you get the checks and balances that have led to moderate policy, not extreme proposals.
And let's talk about the economic news that we've seen. And really, you have to start with the earnings that came out this week that really were stunning.
Earnings continue to surprise. It's one of the best earnings seasons I can ever remember. 85% beat rates on earnings and revenues, when the typical beat rate is more like 64%. We saw, as an example, Qualcomm, a very large semiconductor company that addresses the deployment of 5G across the planet, up 14%, boosted their guidance, suggested that businesses continue to accelerate despite the pandemic. And there are any number of other examples like that. Costco had great comp store sales, but really a fabulous earnings season. And I think part of the reason stocks hadn't reacted to this earnings season was just uncertainty about the outcome of the election.
So now we know at least somewhat what the election looks like. We had earnings reports, and we talked about these earnings reports because of the GDP report that we saw last month, where it suggested that we'd have a 35% increase quarter over quarter. And I got to tell you, that was exactly, it was stunning. And so therefore, earnings followed through. And then secondarily, jobs. We got an employment report on Friday morning. And again, 638,000 jobs added. And the unemployment rate now under 7%.
Yeah, fabulous jobs report. The only bad news in it really is that job growth has started to slow. But remember, it got incredibly high. The unemployment rate spiked up to almost 20% in March and April. We've basically cut that in half. And that's one of the reasons why we continue to expect and hope that the federal government will do more fiscal stimulus as income replacement to help get those that are being unfairly disadvantaged by the virus back on their feet.